In Asia rose with Hong Kong stocks leading the gains as of its final hour of trading, the Hang Seng Index in Hong Kong jumping 3% as shares of Chinese tech giants Tencent and Alibaba rose. Mainland Chinese markets do remain closed for the remainder of the week. They will open, however, tomorrow. European stocks rebounded, continuing a week that has seen wild swings in global market sentiment and trading. October, of course, has been an unexpectedly volatile month driven by uncertainty about U.S. fiscal and monetary policy and, of course, those supply chain constraints. To talk to us about how all of these themes are affecting markets, we are joined by Matiti Tulare, who is the head of FX execution at RMB. Matiti, thank you so much for your time. Checking in on the JSE right now, I mean, what's your take on its performance so far?
Hi, Nas, and I suppose it's been a really strong start to the day as the JSE obviously follows global markets higher. I mean, we are seeing resources up like 2%. They're the ones that are leading the charge as PGM stocks rebound. We have seen the likes of Implats about 3.8% up, the likes of Sibanye Stillwater 3% up, and the likes of Kumba Iron Ore up 5.1%. But the outperformer and obviously the laggard there is Exxaro, which is about 1.2% down. The likes of Anglo American also 3% up, and BHP Billiton. Somewhat interesting is Sasol. I mean, it's call it close to 5% down, giving back some of the recent gains that we've had. But I think the one other stock that everyone really keeps an eye out on is Naspers. That's 3% higher. Obviously lagging Tencent in the Asian close, that closed up around 5%. And I think the rest of the retail sector really remains mixed. I mean, obviously there has been some corporate event news with the likes of Massmart. That's up at 2.6%. That's outperforming some of its peers, the likes of ShopRite, which is down 2.5%, and the likes of Clicks, which is around 2% down. But also what we are seeing in the banking sector, not much. I think, we are seeing the likes of Absa and Capitec about 1% down. The rest of the sector there is relatively flat. And I suppose, as we go into the close of the week, all eyes will be, unfortunately, on the non-farm payrolls tomorrow afternoon to give us a bit of guidance.
I'm going to come back to that word, unfortunately, that you used, but let's talk about Sasol for a bit. I mean, what do you make of its trajectory from the days when it was regarded as one of South Africa's dogs in the investment landscape to where it is now?
So it's quite interesting because just about 2 days ago, one of my colleagues was really kicking himself at not buying the share price when it was down at 25 Rand a share, and then obviously where it is now relative to where it is now a year later. But I suppose when you look at it in hindsight, that's always a perfect science. But nonetheless, a lot of oil producers and companies are benefiting from the higher oil prices, and they're really smiling, as well as a few investors. I mean, the benchmark Brent crude price has surged from $76 a barrel just a week ago to above $82 a barrel. That's the highest level since the peak of $86 a barrel that we saw in October 2018. In fact, I mean, except for this quick run in 2018, oil prices are at their highest since 2014, when they came crashing down from $100 a barrel. Remember, at that point in time, a lot of people were starting to call $200 a barrel, for oil prices. But so, the likes of Sasol shareholders really benefiting from the increase in oil prices, and partly also driven by the weakening rand, obviously, as the recent surge in the share price shows. I mean, the recent strengthening of the crude oil price, and also expectations of continued strength in economic activity globally post COVID-19 restrictions, and obviously as the vaccinations globally are ongoing. That's good for the energy sector, and obviously just means that a lot of jet fuel will be utilized by the likes of the airlines for them to utilized for travelers and et cetera. So it just shows you that, the likes of Sasol, they are going to benefit. But also, don't forget, I mean, there is a push against fossil fuels, and also a lot of ESG strategies of targeting investors, and obviously the funders of oil projects and coal projects. That has resulted in a shortage of capital. So that is something that, has led to a few cancellations of projects to develop new oil reserves and also increase production. That's also playing into Sasol's hands. And I think, some analysts are starting to call 400 Rand per share on the Sasol price in the next few years.
All right, Matete, let's leave it there. I would have loved to talk to you about, the jobs report numbers and that description you used as unfortunately, and also look at, the dollar dominating the G10 space when you look at that basket of currencies. However, we'll have time to chat about it on another occasion. That is Matete Tulare, who is the head of FX execution at RMB. We're going to take a quick break, and when we come back, we'll have the labor force with Mbongeni Mutsu.